Hey everybody, welcome back to the Thursday evening Financial Thing live stream. Thanks everybody for tuning in this evening, wherever you are in the world. We got a ton of stuff to get to. First of all, let me just mention my sponsor for this YouTube this evening, Kuflink. As you know, you can sign up if you're a new customer and receive up to 4,000 squid cashback on your first investments. Terms and conditions apply and capital is at risk. You can go to join.kuflink.com/financial-thing. If you're not a Kuflink investor, I would definitely recommend checking that out. One of the good peer-to-peer companies, in my opinion, not financial advice, of course. And what are we talking about today? We have got a lot to get to. We're going to do some peer-to-peer lending news. And we're going to be talking about what's going on at Assets Capital. I'm going to show you what's going on in my own account. Some concerning things, I would say, with regards to defaults. Things to really be aware of in Assets Capital. And it is a company that I've been investing through since, I think, 2015 or 16, and quite happily. But what I have noticed is the returns on my account have been steadily decreasing because of the defaults on a lot of the manual investing loans that I first entered into at the beginning of my investing through them, and through, I think, 2017-18. So we're going to have a look at those loans and see what's going on, because it's something you should be aware of if you are an Assets Capital investor. We're going to be talking about what's going on with Bitcoin this week. If you follow the cryptocurrency space, you're going to see that Bitcoin hit its all-time highs. Not quite in my prediction of $70,000 this week, but we got really, really close. And I know that we are going to smash through that at some point in the next, I would say, few days or a couple of weeks. Things have settled down a little bit. So we're going to talk about that. We're going to talk about what's going on with the ETF that was released this week in the USA, the Bitcoin Futures ETF, how that really affects the Bitcoin landscape going forward and what we can expect. And I'm going to show you too my Wealth Simple account. As you know, robo investing. I had a lot of emails about whether things like Wealth Simple are good for people to invest in. So I'm going to kind of go through and show you what's going on with my own account. And it's pretty interesting things going on as far as the allocations and the way that they allocate funds. And one of the reasons that I am not a particularly big fan of robo-investing. But however, I would say robo-investing is better for people that are not going to invest at all. So if it's a choice between robo-investing, not doing any investing, robo-investing definitely wins over that one. So we're going to say a quick hi to everybody in the stream. Please hit that thumbs up if you can, to get the YouTube algorithm on our good side. And we have Annabelle Nyron in Spain. I presume buenas tardes a todos. I believe that means good afternoon, everybody, but maybe evening. Good evening from Patty, Jeff Day. In where are you, Patty? Where are you, Jeff? I forgot. Colin Perry in the Peak District. Stephen Hale in Chile, Nottingham. Brian in Woburn. Alan Toombs is here in Basingstoke. Paul Bagworth in Kenilworth. Peter Vince. Lovely sunny day here in Leatherhead. Alan Brooks from a wet Harrow, Middlesex. And Dave Dawson in Staffordshire. Is that the home of the Staffordshire Terrier? I would imagine, right? Hi, Mike Powell in climately confused Southampton. Yes, we are streaming, Patty. S. Connor is here from a very cold Manchester. Aki Chap, of course, in Accrington. Yes, I was a few minutes late today. Apologies. Just grabbing a little, making a little green shake for the stream to keep me nutritionally gone. Alan as hi all from Las Malvinas. Okay. Filmcore, hi Mem in Chile, London. And Stephen Solihull, correcto. Patty is in France. Jeff Day in France. Okay, cool. Excellent. So let's get right into the to the news this week and see what's going on. Let me share my screen with you. Bingo. And Goldman Sachs continues to back Europe's peer-to-peer lending sector. Goldman Sachs has been putting a lot of money into seed money into peer-to-peer lending companies, which is good for the fintech sector. Definitely more European investments going on. They have also agreed a funding line with Initiative Ireland, which the peer-to-peer firm said it will bring its lending capacity up to 900 million euros, very close to €1 billion within the next 3 years. That is very bullish for Initiative Ireland. And this is very interesting what peer-to-peer finance news wrote. This is the latest inroad that the so-called vampire squid has made into the peer-to-peer lending market. I'm afraid I don't really know what that vampire squid references to. Maybe something to do with that Goldman Sachs is a pretty shady finance company with total sanctions of $9.8 billion of getting their hands spanked for doing bad stuff over the years. Are pretty interesting reports if you want to look at it on bettermarkets.org. You can see what Goldman Sachs' rap sheet is like, so I wouldn't necessarily pay much attention to the things that they do. But yes, they continue to put money into peer-to-peer lending and fintech, which is a good thing. LendingWorks partners with Experian to boost credit checks. This is a good thing too. LendingWorks got to make sure that those lenders are good lenders. Good borrowers with the lenders. We want to make sure that the borrowers are quality, and anything to boost credit checks for LendingWorks is good. Again, not one of my favorite peer-to-peer lending companies. I am slowly dripping out of there because of the things that happened during COVID. I think there's, possibly better places to put your money. That's just personally what I'm doing. Brick owner increases minimum investment. So, it used to be £100 min, now £500 if you want to get in on the loan. And it says the change applies to new investment and brick owner's secondary market. Again, I think that's probably some FCA squeezing going on there. But what I wasn't happy about with Brick Owner, I wanted to go and read a little bit more about this company, find out what they're up to. But alas, you try to click on anything on their website and you have to sign in, sign up. Just to even read the information in the About Us or the FAQs. I mean, come on, Brick Owner. That's a little bit ridiculous. The only thing I can read is the blog, but if I want to get into the About Us section and read about what Brick Owner, who they are, I cannot actually do that. So a little bit disappointing there, Brick Owner. I hope that you sort that out. I don't think that information like that should be behind any type of sign-in wall at all. Let us read what you're up to. Money thing administration extended until the 20th of December. I mean, this is, we all know that that's not going to be wrapped up by the 20th of December 2022. So kind of made me chuckle when I read that. Again, the more that these things get extended, the more administration dollars and pounds that can be collected by the administrator, which comes out of our pockets, the people that have invested through money things. So nothing really to see here, but interesting article here. Bond Mason. I always like Steve Finley. He tells it like it is. He, was the Bond Mason chief, and they closed their doors, but managed to pay everybody back in full, which is amazing. Thank you, Stephen, for doing what you said you were going to do. And he has said that he is frustrated with the administration costs. So this is, ex-CEO of a company that is actually going through this right now, has paid back all the lenders, and has now experienced just how costly being in administration with the loans running out and how costly that is. So he said it's been a painful couple of years to get there as far as paying people back. It's the right thing to do when you are custodians of other people's money. Well done, Stephen, for understanding that we are people who put our own cash in, and it's nice that you take that seriously. Finley said it's frustrating to see rising administration costs, which will affect how much is left for lender repayments from loans with platforms in administration. There are a lot of legal costs going to and from the courts to ensure everything is legally being done in the correct way. inevitably that will impact the net amount available to investors when it's fully run through. I mean, we all know this. We've seen these administration costs really start to soar, but it's nice that somebody comes out and says it to the press. I've always been kind of an advocate that these administrators are just, really not doing the right thing as far as lenders go. The costs are just too high. There should be some caps on those costs, maybe performance-based. It'll be a much fairer way, in my opinion, to do that, but we'll see. 24% of Brits do not save money each month. Wow, I mean, come on, people of England. You got to start putting some cash away in that little pink piggy bank, whether it's, you'd be putting some, hopefully, in some Bitcoin, like I've been kind of harping on for the last year or more. But apparently, a survey of 2,000 people commissioned by a debt management company, Lowell, has found Plymouth and Birmingham save the least out of all UK cities, with 34% of their residents saying that they never contribute to their savings following payday. Number one thing that I always was told, and I didn't follow through on it for a long time, full disclosure, save 10% of your paycheck, your wages. It's pretty good if you can do more. A lot of people, unfortunately, don't have that. However, what I will say is a lot of people are also spending money on coffee, eating out, that they could not be doing that. If they're spending £3 a day on buying that cup of coffee from Nero or wherever you like to go, Costa, I mean, that's about £90 a month. You cut that in half, you got £45 a month to invest. So I really, these whole excuses, why I don't have the extra cash. Most people, in most cases, no matter how little they make, do waste money on things that they could probably not be wasting money on. A lot of that, again, financial education, they just don't know how to invest, and they just don't think about it. So Sheffield, 31% of people don't save. Norwich, 29%. Glasgow, 29%. Really sad thing. Hopefully that can change in the future with, education, financial education. See what happens. This I liked. Autumn budget. There are calls by the Investment and Savings Alliance, TISA. They've urged the government to allow savers and investors to invest in more than one of the same type of ISA in the same years. The ISA laws are, if you want to open a new ISA in a particular sector, you can only open one. So if you wanted to open an IFISA, you can only open one a year. I think people should be allowed to open as many as they want. Problem with that is tracking is difficult. This is the way the government has always said no to. But hopefully that will change in the future to make it more simple. Let's see. Let me zoom out of this just a little bit. I don't know if you can see that. Zopa has raised $300 million at a $1 billion valuation to expand its peer-to-peer lending and savings neobank in the UK. So they are doing a pre-IPO round. Would I invest in Zopa shares? Absolutely not. Not financial advice, but we saw what happened with funding circles float. I think it's pretty risky. Good chance that share price dips down after it gets released. But again, do your own research. But they have raised another $300 million US dollars. So they are on the way in the right direction to raising a lot of cash for their business, which is it's a pretty good thing. Zopa being one of the top companies as far as the top big three of originally that were starting in peer-to-peer lending. The only one that is still doing peer-to-peer lending. Let me authorize this Assets Capital login. One thing I like about Assets, by the way, I love their security that they have on the websites. I found that some of the fintech websites don't really have great security on on their two-factor authorization. So I like the fact that Assets has something going through an separate authenticator. Pretty cool. Now I hope that you can see this. We're gonna take a look at my account, see what's going on with these Assets Capital defaults. Pretty sad, really, to see all this red. Let me share my screen. Again, you can't see, I think, some of the screen here on the left. It's kind of cut off, but let me see if I can move this over a little bit for you. There we go. Okay. So as you can see here, look at these amount of loans that are trading suspended right now. You see a lot of red here, quite concerning. Again, my assets capital account has been drained down quite a lot. I started pulling out money sort of during the COVID when things were, were kind of stuck in. I took out a lot of the interest payments as they came out, sort of winded down the account a little bit just to diversify. And alas, this is not looking really healthy. Look at all these reds here, and some of these loans are pretty big. I mean, you can see this one here. I don't know if you can see it. 2.2 million pounds. I mean, this is a big default. Yeah, this is a Marine Capital. Let's take a look at this. Not a good thing. They've got, out of a total facility of 2.08 million pounds, 2.007 million pounds remaining. So, I mean, this thing went into default, and a pretty big size loan. So there are updates saying that they're trying to figure out what to do, but this kind of default situation is never really a good thing. And you can see again more just red all the way down. You got these wind turbines here that really didn't work out well, but they did get some money back on them. One good thing I will say about assets capital is a lot of these loans amortize, so some of them have only got half of the loan terms left, so the risk gets reduced as more of the capital gets paid back. Still not a good thing though when you're seeing so much red. I mean, look at this. This is just my portfolio. If we go to all of the live loans in total, this is 42 loans in the manual account, and personally I think I have about 16 out of 27 that are now trading suspended. And if you look at all the loans of the 42 total on the manual lending right now, you can see the majority of them are trading suspended. So not such a good thing. I'm going to reach out to Stuart Law, find out what the hell is going on. Why are these loans struggling? Is this going to be a problem for them? We'll find out. Something to keep an eye on. By the way, if you've looked at the newest top 5 list, actually assets has dropped to the bottom. If you want to go and get the new top 5 list, I sent out an email this week with a link to it. But things are ever changing in peer-to-peer lending. You really have to keep an eye on what's going on. Don't be afraid to move your money around. If you see things like this happening, it's okay. It's okay to ask questions. It's okay to move your cash if you need to do it. I have no problem. If a company is doing well, I'm going to keep my money there. If I see them doing badly or things like the defaults are coming up, time to change. Okay, let's look at Wealthsimple. Again, this is a robo-investing company. I started, I think it was back in 2017. Really wanted to test out a robo-investment company. Didn't put a huge investment in because I had a feeling that over the long run, these robo-investing companies are going to really outperform what I could do on my own, which is just putting it into an index tracker. And you can see here, we've got a £136 return. So I think I started with 450. That was the beginning, so 2017. Time weighted 29%. 29% time rated return, which on the surface doesn't look that bad, right? But if you actually take a look at the portfolio here, and I chose a more aggressive portfolio of 80% equities, 20% fixed income. And here's the problem. Here's the problem with these robo investing, and I've talked to you about this before. You just get so many buckets of different things. You see these, some things just don't perform as well as the others. And you can see here the UK equity, what is this? iShares UK Equity Index. Again, I always hop on about why I don't like the FTSE, why I don't like the UK FTSE. Here's a perfect prime example of what happened. 18.6 return percentage-wise over 4 years. But look at the US equity returns here, 72.8%, so way outperforming the UK equity market. And again, this is, you're never guaranteed with this. This is not historically going to always work out this way, but over 4 years, I mean, that's a pretty decent amount of time. And even here, you can see the difference between these two funds that are both UK equity funds. One is an Amundi fund, and then one is Vanguard. Of course, I like the Vanguard funds. Look at the difference in fees, 0.25% for the Amundi and 0.1% for the Vanguard. So you're paying 0.15% less in fees. Exact same allocation, a little bit more in the Amundi. And look at the difference in performance again. Vanguard 72.8% in returns versus the Amundi 64.8%. So you've lost 8% in returns. Again, some of that's due to this fee being more expensive. And usually these funds, they could do exactly the same thing on the tin, but the fees can be different, and that can result in some pretty decent size losses in returns. Imagine if you were adding a couple of zeros to this number. Those would start to look really significant, and if you compounded it over 10 or 20 years, that's why it's very important to pay attention to those funds. Now look at the other, we got the emerging markets, 19% in the green. Europe, excluding the UK, 33%. So nothing, even down here, down to Asia. And then you got these company bonds. I get asked a lot too about company bonds. Should I invest in company bonds? There you go. iShares Corporate Bond Index in the UK. So this is an ETF or a fund that invests in UK corporate bond shares, and it's only done 8.8% in 4 years. Pretty bad. What else? We got the UK government bonds down here, 5.7%. Emerging market bonds, 5.4%. And then even here, global high yield company bonds down here. You can see the PIMCO one has only been 14.9% in the green. So again, UK, even US government bonds and corporate bonds, just not going to get really good returns, and it's getting worse. And you are taking some significant risks with these company bonds because you are lending money to the actual companies themselves. You can see some of the fees here. This PIMCO fund, 0.55% a year in fees, and it's just not really performing well. So again, this is why I'm always harping on about the US index trackers, because they just have historically outperformed the UK. I mean, you're talking about what? 3 times worse performance on this UK equity UK equity fund. This is an index fund, by the way, so extremely low cost, and it's just tracking the FTSE, and it's not done very well. So am I really happy with this Wealthsimple? You know what? Again, because I'm a DIY investor, I will obviously not want to use this as my main form of investing, because it is going to really, really underperform what I could do on my own. Now, if I had the ability to say I want to put more into this Vanguard fund and less into these other things, and maybe more customized, tailor, I don't think you can do that on here. Then this fund performance would have been a lot better here in this account. But as it stands, 30% return, okay, not bad. But compared to just banging it into an index tracker in the US, or the Vanguard US index tracker, we would have been 3 times as tripled our money. So good result. I don't know about that. So we saw this week, we had the release of the US Pro Shares Bitcoin Strategy ETF, and this was a big deal for cryptocurrency, because it's the first time in the US that a crypto ETF had been given the okay by the SEC to go live, and they didn't stop it. We have got some crypto ETFs in other countries, but the US, obviously a lot of eyes on the US when it comes to crypto. And this thing went live a couple of days ago. You can see today it's down minus 5.59%. Now, the thing about this ETF, it is a futures ETF. And for anybody that doesn't know what that is, the difference between a futures ETF, it doesn't really hold Bitcoin directly. It's derivative contracts. It's very complicated. This is not going to be the way forward for ETFs. And when it comes to cryptocurrency, this is just really the start. This is more of a speculative thing. The future ETFs that are going to come out in probably early or mid 2022 will be funds that actually purchase the Bitcoin itself and hold it within the ETF. And that's when you're going to see really the prices just start to skyrocket, because once these ETFs start accumulating Bitcoin or Ethereum, remember, prices go up when people are accumulating. These funds are going to accumulate billions and billions of dollars of ETF Bitcoin. Now, the one thing, this was one of the most popular ETF releases in history. This futures ETF, a ton of money went into it, which is kind of mind blowing if you think about it, and if you think what's going to happen in the future when people like Fidelity, Vanguard, possibly Charles Stanley starts offering regular BTC Bitcoin ETFs. Obviously that demand and supply is going to really, supply decreases, demand increases, price increases. So we're going to see some really big price explosions. The fund not really doing so good today. Personally, not something I would invest in, but however, it's brought a lot of attention to the crypto space, and it's brought a lot of legitimacy, because ProShares, very big ETF company, so they're the first in, the first mover. And what we're going to see here is future things being filed with the SEC in the USA. Here is a Grayscale filing to convert Grayscale's Bitcoin trust into an ETF. This is just happened a couple of days ago. Grayscale is one of the largest digital currency asset managers. They have a trust ETF, it's called the Grayscale Bitcoin Trust, where they actually own Bitcoin. They buy it and they hold it within this trust. They want to change this into a Bitcoin spot ETF. Once that happens, it's going to open the door for all these other companies. Once one ETF comes in, one company, more follow. It's happening this week. We're seeing more filings coming in for more financial companies doing futures. I think we'll see probably 5 new Bitcoin future ETFs next week. So this is one of the reasons why you're seeing this big price jump this week, where Bitcoin hit its all-time high. There's just more legitimacy coming into the space. We're seeing a bit of a dip right now, obviously a runoff, but that's perfectly normal. And you can see here the run up from 58,000 US dollars to where we hit the all-time high, just a hair under 67,000, which is huge. And if we look over the last month, you can see this run from 42,000 US up to 66,000, and also bringing Ethereum with it, which is what usually happens. You can see Ethereum here absolutely super high, hitting $4,000, I think $366 at its high. So Ethereum's just had a really big run, almost doubling in 3 months. And this is just going to keep on going as more and more people enter the space, and cryptocurrency is becoming more legitimized. A couple of news stories this week. Coinbase is confirmed as a custody partner for Facebook crypto wallet. I mean, this is going to put a wallet in Facebook that's going to allow people to send cryptocurrencies anywhere in the world for no fees. I mean, that's crazy. You're just going to see, again, more and more eyes coming into crypto, and Coinbase is partnering as a custody partner for Facebook, which is just massive. Facebook was going to do their own cryptocurrency stablecoin, but so far we have not seen that come to light. And so that will happen in the future. It's going to happen, I would say, within the next few months. Again, more notoriety onto the crypto space. Had Peter Thiel say he underinvested in Bitcoin and slams the central banks. This guy is a big-time investor. Peter Thiel, tech billionaire. And he's saying he doesn't know what's going to happen with the price of Bitcoin, but this is a very interesting comment here. It surely tells us that we are at a complete bankruptcy moment for the central banks. Again, this is the reason why things like Bitcoin have become popular. People want to separate their money from the government control, from the central bank's control. And this is why Bitcoin is becoming more and more popular, because we are having serious money printing problems that the central banks are making worse, digging their own hole. So he is saying he is underinvested in Bitcoin. And really interesting, this week we saw a flash crash, and I don't know if I have this. Let me see if I can find this story here. But I think it was today, Bitcoin flash crashed on Binance in the US down to $8,000 just for a minute. It was very, very, very quick. And let me show you here. This just happened. Price was around $65,760 before the flash crashed. It dropped 87% in 1 minute, down to 11,200 US dollars. We don't really know why that happened. It only happened on Binance US. This was not something that happened all across the board. Likely some people got very rich as they were able to get in down here at 8,000 US, which is incredible. I mean, this is why some people set limit orders for cryptocurrency and just leave them at very low numbers, because occasionally things like this happen. It should not be happening. It shouldn't be happening. It's obviously a technical thing going on. Some people say market manipulation, but you can see it bounced right back to the same $65,760 level within 1 minute. But you know, some people were able to buy the crypto at that price. Crazy. I mean, absolutely crazy that happened. And then last piece of news here, Mt. Gox rehabilitation plan approved. Now, for anybody that's not really familiar with Mt. Gox, this was one of the first cryptocurrency platforms that was created in, I think it was 2011 or 12, and then the platform collapsed in 2014 and took 850,000 Bitcoin with it that they say was stolen. There was talks of fraud. You know, this was way before the crypto space was mature. And now they're saying that after 7 years of being in court and trying to figure this thing out, they are going to be able to send people Bitcoins. They've got 150,000 Bitcoins that have been recovered. So they're going to be able to pay back just millions and millions of dollars to people that own crypto. They were very early adopters. I mean, these people were buying cryptocurrency when it was, you know, $50, $60, $70, and they lost their Bitcoin holdings because of this hack. So now they're going to get paid back. So somebody that held, you know, 3 or 4 coins is going to be very, very happy, or 100 coins, however many. So that is pretty cool that they are going to get paid back after all of this time. Again, this is not something that we would expect to see now on one of the major platforms, some kind of a hack like that. The security is way more advanced. And then also the good thing about cryptocurrency is it is retrievable. Like I said, we've talked about what happened with this oil pipeline hack, and how a lot of those Bitcoins are actually sent back and they're able to be retrieved. Same thing happened with the Mt. Gox Bitcoin, even though they didn't get them all back, that they are estimating about 600,000 were actually lost, because they found they found a couple of 100,000 in a whole wallet that was hanging around somehow. But yeah, people are going to get paid back. That's a really excellent thing. Really super happy to hear that. And we'll see what happens. By the way, if you haven't noticed, down at the bottom right here, there is a little thing that says become a Patreon supporter. As you know, I've been doing this financial thing website for 2015. Everything is completely free. But I do get questions about how can I support financial thing? Is there anything I can do? And so I set up a Patreon channel for as little as 1 cup of coffee a month. You can become a supporter and become a monthly supporter. So you can scan that little code with your phone if you want, or you can go to, here it is, end of the stream. If you want to become a supporter, hey, I will not stop you. I will not beg you for it either. But I would certainly appreciate, I do have costs for running this channel, the streaming software, for the hosting, for running the website. So if you want to become a Patreon supporter, and what I'm doing inside that Patreon account, by the way, is I'm putting my exact allocations for all of my stock purchases, the trades, all of the cryptocurrency, what I own in there, so you can see everything transparently. I thought that would be a little bit of a perk for people that do want to become a supporter. And again, you can do this for as little as £5 a month, which is a couple of Starbucks coffees, right? So anyway, that's what I got for you. If you have any questions or comments, you want to put them in the stream, I'll go through them real quick. And then what time is it? Oh, we're at 40 minutes. I'm trying to run through a lot quicker. Trying to run through quicker. We just have so much information to get through every week. So yes. No, I've never heard of Las Malvinas. Oh, it's Malvern in Worcestershire. I got you. Okay. S. Connor says, agree about Brick Owner. People have been complaining for as long as I can remember about not being able to read info on them. I wouldn't invest with them for their secretiveness. I'm gonna email them and find out why they do that. See if they'll allow people to be able to read their information. Patty, Jeff says, Blend seems to be a great P2P, but the investment cash drag is a pain. They've had my dosh since October 14th. Yeah, they actually sent out an email this morning saying they're introducing some new products, so they understand about this whole demand and supply, which they're trying to tackle. So I think they're hoping that the new products will allow them to write more loans, because they're doing loans down to 7% now, which will probably be maybe different loans. Yeah, Mike says he's managed to pick every dodgy loan going. Hey, you know what? I fully disclose what I'm up to. When I first started investing in assets, I have no idea what I was doing. And I also say that for people who are beginning investors, that picking out your own loans, that's what you get. That's what happens if you're not very experienced at really analyzing and doing research. And bear in mind, I wasn't putting hundreds of pounds or thousands of pounds into these loans. I was just putting little chunks in, and I thought, oh, I'll spread it around, and things happen. So it didn't really work out well, but such is life. You win some, you lose some. Anybody that tells you that they're on a 100% winning streak in any investment or peer-to-peer, I just don't believe it. We've all had winners. We've all had some losers. So yes. Yeah, maybe I'll try to get Stuart to come on the stream and see if he can, make me feel better about what's going on. Assets Capital was number 3 on your top 5. What's your view now, Lawrence? Looks like they're on the way out. Yeah, I mean, personally, my returns on assets have just really dropped, and I want to kind of give them a little bit of leeway for what's going on with COVID. They're starting to get back and running. You'll see new loans coming through the emails for new manual lending. So I'm giving them a little bit of slack. But as of today, yes, they've dropped on the top 5 list. So they are not my favorite at the moment. Peer-to-peer lending, I mean, it can change quickly. And within a few days, things change with peer-to-peer lending companies. They change the way that they do their products or change their interest rates, and nothing is always as it seems. That's why I really like companies like LoanPad, because they're simple and they give you the same product offering. There's nothing complicated. We don't have all these different accounts to lend through. We just have a simple product that pays pretty much the same interest rate. So that's one of the downsides of assets. I put it on my review that it's somewhat complicated. It has a lot of different product offerings, maybe too complicated for its own good. Dave said, I rather suspect PayPal getting into crypto will have a very positive effect. Yeah, it's gonna produce a lot of legitimacy, a high network effect. Let's see. It's because it's futures. That's the only reason the SEC authorized it. Yeah, you know what? And that really annoys me because if you think about it, futures are a lot riskier than actually holding the cryptocurrency itself, which just goes to show you, what the SEC and Wall Street is all about. But we will see an ETF, a proper Bitcoin ETF. It's coming. SEC is not going to be able to stop that. They can object to it and they can change the way that it's regulated and make the ETF companies do things a certain way, but it's not going to stop it. Could you modify your Patreon account so I could do a one-off contribution rather than something every month? No, the way Patreon works, Peter, is it's a monthly thing, so no. But you don't worry about it. Look, if it's not for you, totally understand. It's not a begging thing. Yep, Debbie says on Binance USA today you could buy Bitcoin at $8,300 following the flash crash. Yeah, we just talked about that. Steve Thomas, have you got any views on easy money? I don't, because I kind of have a little bit of a bone to pick with them as far as them not being very responsive to my request to come in and sit down and talk to them. But the Easy brand is a legitimate brand, and I've heard good things about Easy Money. I just haven't personally put any cash in there myself. But we'll see. I'm waiting to try to collect some of these funds. I tell you what, I got an email. I got an email this week, and it's not the first time somebody said this to me, but they always said to me, Lawrence, used to be a peer-to-peer lending strictly guy, where you talk about, index trackers and stuff like that. Why do you talk so much about cryptocurrency now? Well, here's the thing. If you find an asset class that you think can outperform other asset classes, you have to start paying attention to it as an investor. Because here's the thing. If you don't pay attention to these things, you could potentially miss out on something very exciting. And I believe that Bitcoin specifically has so much potential for the future to become the best place to put money. Again, not financial advice, just my opinion. But I remember looking at Bitcoin back when it was $16,000, and I asked somebody that I really respected about it, and they said, it's ridiculous, you're just throwing your money away. And if I'd have listened to that person and not started to really look at the different asset classes that were out there, and changing, you have to be able to change. Life is about changing, and when I started to see the cryptocurrency potential, what these coins could do, the technology behind them, I started to pay attention to it. I'm really glad that I did. I have, I'll show you this right here. These are the original buys that my very first cryptocurrency purchases. You can see here. So you can see that I actually did it. This was December the 16th, 2007, when I bought my first Coinbase purchase. It was down here, 0.011 Bitcoin at $17,256 was the price. So yeah, and look at the fee. This was the Coinbase fee. I paid 3% of 200 US dollars. And then here is the Ethereum. Back when Ethereum was $478, I dipped my toe in for 100 US. And now you can see Ethereum has basically 9x'd. And it's just about paying attention to the things that are coming out and the things that are changing. Even, back when I first started the blog, I was a bond investor. I had a good proportion of money in bond index trackers to hedge what I thought might be a big correction. As interest rates started to decrease, those bonds were just going into the negative and were not making any money. Yes, they were hedging, with some safety, but the downside was much bigger than the upside. So pivot and change. That's what investing is about. You learn about new things, you pivot and change. So, I've since gone more 100% into equities because of this bull market that we're in, and out of bonds because they don't pay any returns. And then started to look at other things outside of peer-to-peer lending and in the crypto space because of the massive opportunity that I believe in the next 5 years people are going to be kicking themselves saying, God, if I could have gotten in at 60,000, why did I not do that? Back when I used to think about 17,000 as being expensive, I think we're going to look back and see 60,000 as being cheap, the prices today. So we have to look at new opportunities and, say, are there better places to put money? Not to say I'm not going to hedge with peer-to-peer lending. I think it's good to be diversified, and I think it's still good to have a portion in cash, a portion in peer-to-peer, a portion, if you can, in property. But if you think about like property, I've always thought about landlording. Is landlording a good place to put your cash? Let's look at things now. 5 years ago, I said for sure I would rather put my money into property, buy-to-lets, than cryptocurrency. But now, being a landlord is a pain. These tenants, they will mess up your units, they will mess up your houses, your apartments. I've done it. I know. I've been a landlord. I know what it's like. You don't really get a lot of yield. It's expensive to buy. There is risk involved in property because look what happened in the crash of 2008 and 9. It's not immune from going backwards. You got to put your credit on the line if you want to take out a loan, which is the best way in theory to make good returns in real estate. Leverage your money. But you do have a lot of downsides. If you spend £200,000 on a flat, say, or 250,000 down in Dorset, you're going to rent that place out net for about 850 to 900 pounds a month. So we're talking about 3 to 4%. Yes, you hope for capital appreciation on the property, but for 3 to 4%, you can never rely that you're going to get capital appreciation on a house. Hopefully you will, but if you don't, you can only look at what you're netting out. So if you pay cash for a £250,000 property, you're getting £900 in rent. And that's without any vacancies. That's providing that the tenant doesn't put a hole in your boiler and flood the place, or ruin your flooring. So 4%, huge outlay of cash. Is it the best place to put money nowadays? I don't know. Maybe, in my opinion, it might not be. You could put your money into Bitcoin, let it sit. You could even borrow against your Bitcoin. You could stake it. There's places that will pay 4 to 6% to stake your Bitcoin every year. So, and no headaches. Of course, you're going to have volatility. That's what comes along with a new asset class. You get volatility. But again, I think diversifying into all of these different areas now is the way to go. It's okay to have some index trackers. It's okay to have equities, shares, individual shares. I used to be a total naysayer of buying individual shares. I thought it was too risky. But as I learned more about stock picking, you could just get really good returns if you can get that right. You can also get really hammered and lose a lot of money if you pick the wrong shares. And then your cash is just not going to get you anything, but you got to have some money and expenses. But again, diversify into all of these different areas and not having the blinders up saying, well, somebody said cryptocurrency, for example, is a Ponzi scheme. So I'm just going to not take my blinders off and I'm going to listen to what they say without really researching exactly what cryptocurrency is. And look at where the smart money is going. It's a big thing in finance and investing. You look where the intelligent money is going. And, a lot of the big money is going towards cryptocurrency because they're looking at the potential and what they can make. The institutions are going in. And this is honestly a once in a lifetime generational asset that we've never seen anything like this before. So it's something that should be paid attention to. Even if you just dip your toe in the water. I mean, think about those people that put $100 in back in 2011 now have a whole bunch of money in crypto assets. They just dip their toes in for a small amount just to get some exposure. So yeah, that's it. And yeah, I was talking to a friend of mine. He has never invested one single pound of money in his entire life. He's a business owner, and he's just scared. I said to him, "Why are you not investing?" He said, "I don't know. I don't know what to invest in. I'm scared I'm going to lose my money, and there's just too many choices out there." I said, "Look, just put £30 a month away. Buy some Bitcoin, £30 a month. You're not going to miss it. That's 2 takeaways a month that you could do without. And you'll be in better health and better shape without eating all of those bad foods anyways. And just start." So, I think that's good advice for anybody out there. Just start, even if you're a complete naysayer and you think I'm completely wrong and everybody else is wrong about it. You might really regret not dipping your toe in the water just see what happens in the future, because if Bitcoin does go to the $1 million, $5 million mark, you'd be pretty happy. So anyway, I'm going to get off my preaching soapbox, as they say, and Oh, and I just so Debbie says I think crypto is awesome, but I also love tulips. This is not anything like tulips. That whole tulips argument, come on. Not even the same thing. I mean, tulips die after what? A few days. Crypto is not dying. Yeah. Fear. I mean, fear is the number one reason. I think once these Bitcoin ETFs come out and Fidelity and all these big investment companies, BlackRock, start offering these products, then the legitimacy will be there. And you're just going to see this price absolutely start to take off. That's, again, not financial advice, just my opinion. We're still in the early stages for anybody that thinks this crypto stuff is too expensive. Again, I'm not saying, go blow a bunch of money in cryptocurrency. Some of those other coins probably going to go to zero, but Bitcoin, in my opinion, safest crypto asset out there. Fully believe that it's going to be 6 figures by the end of the year. You can come back and yell at me. I'll get the crystal ball out. 6 figure. It's right there. Can't you see it? It says it. Six figure Bitcoin. This is not going anywhere. It's not going to get regulated and shut down. It is going to be a legitimate asset class for a younger generation, older generation, mid-generation. And I don't think it's like the tulips. Sure, I mean, you could say that. Sure, okay, it's just like the tulips. Yeah, that's not true. Nothing like that. Demand and supply is everything. There's a lot of demand. Limited supply, price goes up. Anyway, that's it. So, we'll be back next Thursday evening, same time, same place, 7:30 p.m. UK time. I think we're going to have a time change soon. Me being 5 hours back, you being 5 hours forward. I don't think that happens till Halloween. So we'll be at 7:30 p.m. Oh, you want to see the Trading 212? All right, let me show it to you. We'll see what's happening on the Trading 212. Oh, and by the way, I did make those donations. £400 to Forest Home, 400 to Dr. Paula and her Worldwide Healing Hands charity. And we're going to do a little giveaway too for the people who are signed up to the email list. I'm not going to tell you what that is because I don't want to get my YouTube channel banned again. But if you're not signed up on the list, which I think most of you are, go sign up because you can get... you're going to be a part of a giveaway that we're going to give away some stuff that has come from the Trading 212 portfolio. I'm scared to look at it today. I have a feeling it's going to be, the portfolio is going to be in the red. Oh, no, it's okay. Okay. So here's where we are today. 15,112 pounds. So we've come up from 5,500. And what did I do today? I added some more position to clean spark. Let's see here. I think I added some today. It's not showing up yet because it's new. Let's look at the history. Yeah, here we go. We bought 200 pounds of Palantir because that's been in the red, and 210 pounds of clean spark at what was the price? 1756. So it's up 1774. I mean, look at this centrist energy. 80% in the green. It's crazy. Comstock down 11%. Not been a good one so far. Facebook clawing its way back up to hopefully even. Diamondback just a little bit over 2%. Flex about even. Hut 8 mining. Yeah, these crypto mining companies are going to do really well as the price of these cryptos increase. Laredo Petroleum 52%. This one's really fallen back quite a bit over the last month. You can see up here at the high of 92 all the way down to 73. So definitely some fallback on that. Lloyd's Bank 90% in the green. So forget about that microvision. That's just really a dud. Occidental Petroleum 14.8% in the green. Olin, small position. Palantir 3.8% in the red. This was down in the 7% range, so I added some to that position. Too low oil. Kind of disappointed again with this so far. 7% in the red, but this is a long-term hold. Fully expect it to rebound as the price of oil continues to go up. And Vermilion Energy 47% into the green. Now we're fully invested now. 0 in the cash bucket, so fully invested. All the risk is on the table. Heavy into energy, oil at the moment, with a little bit of a hedge here. I mean, we're talking about less than £1,000 hedge with Facebook, and then 500 pounds in the banking. Lloyd's Bank, Palantir, again, it's a bit of a hedge with AI tech. You know, we'll see what happens, but this is going to be a real boom or bust portfolio. So heavy into the oil and the gas and resources, energy. So we'll see what happens. I have a feeling this portfolio is going to really take off over the next couple of months coming into Christmas. You know, maybe we'll hit 18,000 on it. And yeah, I mean, thanks to everybody, because honestly, I would never have started this portfolio if it wasn't for the YouTube channel. And because of the YouTube channel, I was able to make make those 2 donations from the profits on this trading portfolio. So thank you to everybody for tuning in and supporting the channel and watching it, because again, without you, this would not have even happened. I would never even have created this portfolio. It would have probably just all gone into index trackers or crypto. And so I'm pretty excited that I was able to give back and give back to Forest Home and Worldwide Healing Hands. And I think that's about it. So we're going to wrap up. I don't think there's anything else left to say. Gone overboard with the time again. See you next week, 7:30 p.m. Hope everybody has a wonderful weekend. Subscribe to the channel. Check out the Patreon if you so choose to do so. And be healthy out there. I'll see you next time. Take care.